Good morning, everybody. Welcome to our Wednesday live. Thanks for joining us today. Today, we're going to talk about something a little bit different than we'll be talking about for the last few weeks. We're actually going to talk about personal credit. We're going to talk about having a bad credit score, and we're going to give you the formula to fix it. Okay, this isn't a one-shot deal. This isn't something that's going to happen overnight, but I can tell you from personal experience, what we're going to lay out today is exactly what I did to get my score up into the 700s and maintain it in the 700s. So speaking of, I'm Steve Weibel. I'm the Senior Sales Representative here at Credit Suite. You can reach out to us at 877-600-2487 if you have any questions after our presentation. In addition to that, I have my team answering any and all questions in the chat, putting up links if necessary. So let's dive into it. First of all, let's talk about what we discussed last time. Last time we talked about how to find business credit cards with benefits. As a matter of fact, the last time I was on, I think we talked about the rebates, the cash back, some of the more unique card benefits that are out there, how to choose the best business credit cards that benefit your particular situation, and decide between similar offers. And obviously, we offered you even more. Today, we're going to talk about how bad personal credit can actually affect your business. So obviously, as Credit Suite, we talk about business credit on a regular basis. But in addition to that, having bad personal credit can directly affect your business. I tell my customers all the time, as you're working on your business credit, focus on your personal credit as well. You can get business credit without personal credit, but there are going to be times, and we'll talk about that a little bit, where lenders are going to want to see your personal credit. If you have strong business credit and good personal credit, the world's really your oyster. Right? You may be wondering why personal credit matters when it comes to your business. That's exactly what I was talking about. If a business can have its own credit separate from the owner, then why does it matter what the owner's personal credit is like? There are a number of ways your personal credit can actually affect your business. First, it can affect your ability to get funding for your business initially. So as a startup, you've got no revenue, nothing to hang your hat on. You're looking for a loan to get out of the gate. They're going to look at your personal credit. So it's definitely going to affect your ability to get the funding for your business initially. Before you establish and build a business credit profile, you're going to need your personal credit. So if you're a brand new business, you haven't established a business credit profile, then obviously the only thing that they can look at is going to be your personal credit. It can make it difficult for you to get funding for your business even with a personal guarantee. Personal credit also affects the overall fundability of your business. And some business credit reporting models like FICO and Experian actually use your personal credit score in the calculation of your business credit score. All right, so keep that in mind. Some of them do. Right? So how do you fix it? So if you got a problem, how are you going to fix your personal credit? Obviously, the short answer is you're going to pay your bills, right? Pay your bills on time, you can fix your personal credit. But if you already have bad credit, it's going to take some time to make a difference. It's not something that happens overnight, but it can help to understand what all may be bringing your score down, right? So let's talk about what's bringing your score down first, and then show you how you can correct what's happening. So what affects your personal credit score? It's based on 5 main factors. This hasn't changed. It's been around forever. These are payment history. It's going to be your utilization rate, length of credit history, accumulation of new credit, and we'll talk about how that impacts your credit score, and the credit mix. The credit mix is a real big one. We're going to dive into that in a few minutes. If you are ignoring your credit mix, which most people do, they don't think about it, it can directly impact your personal credit score and bring it down. So payment history is obviously the obvious one, right? That's the first one. You've got to make sure you pay your bills. It's the #1 way to improve your credit. There's no other way around it. It has a huge impact on your credit score, but it also takes time, right? Paying one bill isn't going to increase your score, from month to month, right? Even paying the minimum on time is better than not paying anything at all, right? Or paying late. So if it's going to be a tough month for you, if maybe revenue's down a little bit, make the minimum payment. It really can make a huge difference. Make a list of all your accounts, include the minimum payment and the due date. You can do this on a spreadsheet, Word document, whatever. Do not let that due date pass without making at least the minimum payment. As a matter of fact, what I've focused on when I was building my personal credit is the reporting dates. That was important to me. I wanted to know when each lender, creditor, mortgage company, whatever, was going to report to the credit reporting agency. So I wanted to make sure, especially with credit cards, that I paid down my utilization just prior to that reporting in order to keep my score higher or even to increase my score. AutoPay is a great way to handle this. just make sure you always have the funds in your bank account on the draft day. What you don't want to do is have the auto pay not go through. By the time you realize it, it's too late. They're going to report you as late. Okay. Eventually, this positive payment history will overcome the negative payment history. I'm going to get a little personal here. I at one time owned a significant amount of properties. I had a booming business. 2008 came and went, and you can imagine what it did to my personal credit. I was down playing in the 400 range, which is basically nobody's going to give you credit at that point. However, I was able to get some credit cards, low limit, I mean, really low limit. But I paid them on time. I showed consistent payments. I made sure that was my number one priority besides eating. And I didn't just pay the minimum. All right. You don't gain ground that way, because interest obviously is going to keep the balance from ever going down. In fact, your balance is going to continue to increase if you only pay minimums, even if you do not use the account. Okay, because the interest is going to be higher than what the minimum is going to be. This is going to lead to a utilization issue, which is going to impact your credit score. So this is where I was going with the knowing when they report. Utilization refers to the balance on your account relative to the total amount available. So if you have a $10,000 limit on a credit card and you have $3,000 that you owe, that's a 30% utilization. Okay, we like to see it below 15%. Okay, 0% is obviously better. Most lenders want to see below 30, 35%. As a matter of fact, if you go for a mortgage, they typically want to see your utilization rate low, and then they go into debt to income ratios and all those. But you want to keep your utilization rate low. That really has a really high impact on your credit score. A high utilization rate will have a negative impact on your score. This is what brought me to understanding when they report. And you could tell when they report, it's usually the closing date. All right. So when you open up your credit card statement and it says, July 17th or 18th through August 18th, then the 18th is the closing date. They typically report within a day or two of that closing date. Okay. So I would always focus on paying that 5, 6, 7, 8, 10 days early if I was trying to lower my utilization rate, and it will have a direct impact. I can tell you right now, again, personal story. I have a certain credit card that with a fairly high limit, $18,000 limit, and I was at around $5,000, and I knew when I was reporting, and I paid it down to $2,500 right before reported. My score went up 20 points, so it was a big deal because I dropped it below that 15%. So it definitely has a huge impact on your score. Decreasing utilization ratio by using the snowball strategy to pay down your accounts. We're going to talk about what that is. There's a process for doing this. All right, it's called the snowball strategy. It works every time. First, you got to make sure you pay all your minimum payments on time. That's just a no-brainer. You've got to do it. I don't care how bad your credit is now. If you've got any type of credit, continue to pay your payments on time. I promise you, over time, that will diminish the impact that the missed payments will have on your credit report. Matter of fact, to the point where they're on my credit report now, there are no late payments, no missed payments. They've disappeared. Okay, and I had lots of them, literally hundreds of them. Once that's done, pay as much as you can extra on your highest interest rate account. I'm going to stop here for a second. So if you look at your entire credit profile, eliminate a mortgage for a second, so that's typically going to be your lowest interest rate. If you have a car payment, you have credit cards, you have personal loan, you have a store credit card, whatever's charging your highest interest rate, if you look through and you see anywhere from 12 to 28%, take that 28%, get that paid off first. All right, pay as much as you can on the highest interest rate account. It'll have the most impact, even if it's just $5 or $10. It doesn't matter. That extra is really, really going to change the way you look to creditors. Okay, you're going to lower that utilization, and you're also paying less interest over time. Right, that extra money. I always add extra into any payment I have. Matter of fact, I take my car payments, divide them in half. I pay them every 2 weeks, and I pay them with extra in each payment. It knocked down my principal significantly. I pay significantly less interest on my car payments because of the way I'm paying it. So if you can pay extra, pay extra. It doesn't matter what it is. Once that balance is paid off, remember we're on the snowball effect, put the entire amount you were paying on it, including the extras, the minimum and the extra, on the next highest interest balance, and so on and so forth. Continue this process using your personal credit accounts as little as possible. So look, paying the minimum payment every month and then running up your balance again isn't really doing you any good. You're going to always be hovering in that low credit score. I talk to people daily who have 600, 620, 590, and it's not that they're bad credit. It's almost never involves late payments. What it is they're never getting ahead because they're paying the minimum payments and they continue to use the cards. So their minimum payments go up, they're paying more in interest, and their score is not climbing. They're stuck at that tier 2, I call it. Okay, so that's utilization. The payments snowball as you go. If you keep going and you stick to it, eventually you're going to find you've paid down your balances and obviously decrease your utilization ratio, which is going to increase your personal credit score. I can tell you, I told you at the beginning, I was in the 400s. I'm always in the mid 700s now, always. Matter of fact, my goal is 800. And then once I get there, it's going to be obviously 840, 850, which is the max you can get. And one of the ways I'm able to keep my score so high is I don't use the card more than I pay. In other words, if I spend $3,000 a month on a card, I'm going to make sure they get $4,000 if I can afford it. If I can't afford it, I won't use it. So that's really important. Speaking of important, let's talk about business expenses and personal credit utilization. This is where people really, really run into trouble. The utilization factor gets tricky if you're using your personal credit to fund your business. Business expenses are naturally higher than personal expenses. Businesses are the largest consumers in the country. They eat up more than a consumer ever does. I've used this example a million times. I may spend $100 a month on gas, but what does a truck driver spend, right? Thousands of dollars on fuel. I may spend $3,000 once on a computer. What does a call center spend? $30,000, $50,000, $100,000 on computers. And the problem with business expenses is they just keep coming, right? It's just never ending. Like I said, they are the biggest consumers in the country, are business owners. Personal credit limits are lower than business credit limits. And I think we've talked about this in a couple other live streams. Per the SBA, business credit limits are 10 to 100 times higher, which would make sense since businesses consume more, right? Personal credit limits tend not to be able to handle the expenses that businesses provide or require, meaning that if you're funding your business on personal credit accounts, you'll likely always have a high utilization rate. This is my number one pet peeve. When I see people using a quote-unquote business credit card that reports on personal credit, the limits tend to be based on personal credit, and it just knocks their score consistently. They never get that additional funding they're going to need because every time they use that card that reports on their personal credit, their utilization rate goes up, and you all know what happens, right? The score goes down. Then they're looking for additional funding. Their score is too low. They can't achieve it. So how do you remedy this? It's actually pretty easy. You have to find a way to stop using personal credit accounts for business expenses. Sounds simple, right? Just stop using your personal credit for your business expenses. But how do you do that? Well, if you have established business credit, that's really not an issue, right? And that's what we do. But if you have established business credit, this probably isn't a problem in the first place. In other words, if you've already got your business credit established, you're not using your personal credit to fund your business expenses anyway, because you're going to get credit from the people that you need it from in order to fund your business expenses, right? If your business is already set up properly to be fundable, look for vendors that will extend net terms on invoices without a credit check. So if, for example, that truck driver is buying all that fuel, don't use a personal credit card, right? Keep your utilization rate down. Apply for a fleet credit card or a corporate credit card for the business that only reports on your business credit. Consider what expenses you're currently putting on your personal credit and move them, right? Look at which ones you can actually switch over to these vendors. If you buy a lot of construction supplies, why not get a corporate account with Home Depot or Lowe's? Why not get a corporate account with Quill or Office Depot or Staples if you buy a lot of office supplies? In other words, don't burden your personal credit with your business expenses. It's pretty simple if you plan it. If you actually focus on trying to do this, you could be surprised how much you can remove from your personal credit. Once again, this is impacting your personal credit score by not using it, right? There's some examples: office supplies, packing tools, cleaning materials, fuel, which we touched on. These are the combination of these tactics and paying your bills on time will help your personal credit score increase. I promise they will. I promise you. It's not a guess. I've done this. This actually works, and it works like a charm. It's not an overnight thing, but when you get there, it's a whole lot of fun, right? And as you use these vendors, we call them starter vendors, to begin moving business expenses to business credit accounts, you'll see your business credit score will actually start to grow as well. So what you're effectively doing is you're increasing your personal credit by not using it, right, and paying down the debt, And then in addition to that, you're actually increasing your business credit score, which is going to allow you to get additional credit for the business. It's really cool. It's a two-pronged attack that works, and it works every time. Now, length of credit history. This is something that most people don't think about. On your personal credit report, the age of the accounts actually affects your personal credit score. As a matter of fact, and I keep throwing personal stuff out only because I like to tell stories, but I have a couple of cards that I just never use. I got offered them. I took them maybe a year ago. Zero balance on them on a regular basis. The limits are super low, which is why I don't use them. And I realize they're knocking my credit score down because it's taking my average age of credit that I have in my credit report and lowering it, right? So if you have one card that's 10 years and then 10 cards that are 1 year, your average age of your credit's only going to be about a year and a half, right? So eliminating some of those 1 year cards will definitely help if you have a good card or a good debt that's older. Okay, so the age of the accounts report, it actually affects your personal credit score. The more new accounts you have, the more negatively your credit is affected, which is exactly what I was just talking about. The best way is stick with what you have, and only time will do the rest. All right. My mistake was accepting those two cards. I wanted to give one to my daughter, and honestly, it was a mistake. I haven't been able to break that 800 credit score. I know that time has a lot to do with it because it significantly dropped my age of my average credit. All right, my average age of my credit. If you need to access more credit, just ask for a limit increase, which, by the way, is the best policy. If you take a card and you use that card almost like a debit card, use it, pay it off, use it, pay it off, use it, pay it off. You'll find they will increase your limits very, very quickly. When I had that bad credit, I told you I got a real low card. It was $500. Within a year, I had it at $1,500. Within 2 years, I had it at $8,300. Within 5 years, I had it at $18,000. Now, how did I do that? I treated it like it was a debit card. I treated it like that money was coming out of my bank account. So instead of using my debit card, I would use that credit card, and I would literally make 10 payments a month to that because it's all online, right? It's easy to do on your apps. I'd use it. As soon as it showed up, I'd pay it off. Use it, showed up, pay it off. What happens is on that $500 card, I was spending over $2,000 a month, right? So I was spending $2,000 a month on a $500 limit. They see that. They increase your limit. So it's really not difficult if you understand how to do it. You have good payment history with them, they will increase your limit. Okay, that's much better than getting a brand new card. Much, much better. Unless it's a business card, of course. There's another reason not to open accounts in your personal credit any more than necessary, and you guys all know this, right? When credit reporting agencies see a large amount of new credit added to one person's credit, they mark them down. They tend to mark the credit down. All right. Also, as you know, each new account you apply for does a hard pull on your credit report, create an inquiry, and I believe, I'm no personal credit expert, but I believe it's 1.5 to 2.5 points per inquiry. So they have a negative impact on your credit score. You get 10 inquiries, that's significant, right? Let's say it's only 1.5, that's 15 points. Well, if you're pushing that 700 and you're at 685 instead of going to 7, you're going down to 670. All right. It's a delicate balance between new accounts and utilization and adding too much new credit at once. So you want to be really careful. You've got to plan this out, follow the plan, don't deviate. Best thing is that, I hear this, I'm an ex-Marine, discipline's a big deal, right? If you want something, maybe wait till you can afford to pay cash for it, right? But use your credit card to buy it and then pay it off as soon as it hits your credit account, right? Pay it off immediately. I'm telling you, that's the game plan that I use, and it worked. And I read a book on this. I didn't hire a credit repair agency. I just read a book from a senior vice president that worked at Experian, and I can't mention his book, but it worked. In under 2 years, I had a tremendous amount of credit. All right. So speaking of under 2 years and tremendous amount of credit, let's talk about credit mix, because that was the other hard part that I didn't understand. This is what most people do not realize. If you have too many accounts of one kind, it actually negatively affects your credit. So if you have 10 credit cards, never had a personal loan, don't have a vehicle financing, don't have a mortgage, you'd be like, wow, I pay perfect credit. My utilization rate's low. Why is my score so low? This is why, right? So it looks like, yeah, you got all these great credit cards or maybe even a score credit card. They're fine. But if you have a mortgage and auto loan and other types of loan mixed in, it actually helps your score. One more personal story. I really remember I'd lost all my properties. I'd lost my home, bad credit, worked really hard to build up my personal credit, but I couldn't get to that score that I wanted to get to be a conventional loan. I wanted a mortgage and I wanted a conventional loan. And with conventional loans, typically you need a 660 credit score or higher. And I just couldn't get over that 650. Couldn't get over it. And went back, read the book, and they talked about credit mix. And I went, I've never had any other loan. I don't even have a car payment. I immediately applied for a personal loan, took the personal loan, paid off my credit cards to 0% utilization. My score dipped 5 points the first month and went up 30 points the second month. So I got over that utilization, or I got over that 660 credit score. Within 60 days, I was in my new home. So there's a little tidbit, little inside tidbit. Took out the personal loan, paid off my credit cards, paid them down to 0. So that bumped my score, right? My utilization rate went down. Now I had additional credit in the mix. So I have a nice little mix in here. Immediately applied for a mortgage. I can tell you the mortgage, my score went down 40 points the first month, and within 3 months it was back up and actually went up an additional 15 points. So the mix really has impact, and it's something I never thought about and most people don't really think about. You want to have a nice mix of credit. Doesn't mean you want to be in debt, right? We're not talking going into debt, but have a car loan, pay it off. Obviously get a mortgage if you can afford to, pay it off. But you want to show that mix that you've been responsible in all those different items. So if you're stuck at that certain score, that might be what's holding you down. And make sure mistakes aren't bringing you down. This is really important. I found a bunch of my credit report I was amazed at. You need to make sure your credit report is up to date and free of mistakes. So how do you do that? Get a free copy. Free copy, you can get one every year annually. There are 3 main reporting agencies in the consumer world. That's Equifax, Experian, and TransUnion. We all know who they are, right? You can get your free report from all 3. The question is, how do you get it? We're going to show you. Per the FTC.gov, you're entitled to 1 free copy of your credit report every 12 months from each of the 3 nationwide credit reporting companies. You can order online from annualcreditreport.com. That's annualcreditreport.com. I promise you they're going to throw you that in the chat as well. This is the only authorized website for free credit reports, or you can call 877-322-8228. They'll throw that in the chat as well. 877-322-8228. You will need to provide your name, address, social security number, and date of birth to verify your identity. Obviously, you can't just call up and ask for somebody else's credit report, right? So now once you've gotten that credit report, what's next? You've got to make sure it's accurate. So in order to make sure it's accurate, you got to read it very carefully. Make sure certain all your information is correct. I found bad addresses on mine. I found accounts that I didn't own. I found a car payment that reported late on one credit report and on time on the others, right? Didn't even know it was there. It was holding me back. Couldn't figure out my one reporting agency was so much lower than my other 2. It made no sense to me. They're never going to be equal, but it was just significantly apart. And that's what it was. It was just a misreporting. So make sure you go through every single item on your credit report, everything that you have that's active, make sure it was reported correctly, and even things that are inactive. In other words, a closed account, just make sure it was reported properly. If you find mistakes, contact the appropriate creditor in their preferred manner, and let them know. Prove your case, dispute it, however you want to put it. Each agency has its own procedures for corrections, so be sure to check their website to make sure you follow the correct procedure for requesting corrections. And by the way, due to COVID, there are many new allowances, mostly related to online options for disputes. Now, you want to research this a little bit. I know when I was going through this, if you disputed online, it eliminated your opportunity to sue. I don't know if that's still the case. You might want to research that before you decide to do an online dispute. Check with maybe someone you know who's in this business, and certainly read what it says on the website. I found it on the website. It said if you dispute online, you eliminate your rights to sue if they don't correct it. So I didn't want to do that, so I just did it the old-fashioned way with certified letters. So again, make sure mistakes aren't bringing you down. It may take some time, but you'd be surprised how many people have a bad credit score due to mistakes. I just mentioned one, right? Some common things to look for include business accounts reporting on personal credit. That's a no-no, right? We don't want to see your business. We don't want to see Quill reporting on your personal credit report, and that shouldn't happen because you shouldn't be giving your social, but it has happened. Accounts erroneously reporting late payments. I gave you one example. Accounts reporting that are not even yours, right? This happens a lot. I see in family members where you'll have a junior like a Steve Senior, Steve Junior, where junior stuff might report on seniors, senior stuff might report on juniors, or just if you have a common name. I have a, crazy, I love it, love my name, but it's crazy, Weibel. There's not many of us out there. But if your name is John Smith, what are the odds, right? You may end up having something reporting that's not yours. That's the other important part. You need, in addition to getting a free copy of your personal credit report, monitor your credit. There's plenty of free monitoring services out there. We're not going to talk about them. It's easy to find them. You guys probably all know them by name. They're going to give you an updated credit score each month. Now, typically, they're going to either give you a FICO, FICO 3, FICO 8, or they'll just give you TransUnion typically. Some of them will give you, like I think Experian will give you theirs directly, but they won't give you TransUnion. Some of them give you 2 of them. Just pick the one that best fits your needs. They will give you updates. To be honest with you, I subscribe to all of them. In addition to that, I also pay for one. I'm a lunatic with my credit now because I've had bad credit and I understand the impact that it has on me. I monitor everything. If anything changes, I'm notified immediately. You should do the same. First of all, that's how you catch fraud, right? That's a big problem in this country right now. And around the world. If you get notified that there's a new account that's added, you're going to know, hey, I didn't add a new account. You know it's time to go ahead and lock your account, okay? So take advantage of the free services, monitor what's going on. And you're going to get to see what factors may be dragging. Some of these sites actually tell you your utilization rate's too high, too many inquiries. It'll actually tell you what's wrong and why your score's down. So you can create a plan, right? And even for a fee, you can get real-time updates. And that's one of the ones I do. I actually pay a fee, and I get instant updates. I know exactly when my credit score is going to change. I can tell you right now, my credit score, I'm going to get it on the 21st. It's going to be updated. It's going to go up. I'm predicting 20 points. So anyway, to recap, bad personal credit can affect your ability to get funding for your business. We all know that, right? Some business credit scoring models take your personal credit score into consideration, so you have to keep that in mind. You can increase your credit score, but it takes time and it takes a plan. All right. You need to know what's causing the issue before you can fix it. Next time, you'll discover how secured credit cards can help you run your business, how to find the best secured credit cards for your business, other options that may help you fund your business, and how to find them. All right. My name is Steve Weibel, again, Senior Sales Representative here at Credit Suite. You can reach out to us at 877-600-2487, info@creditsuite.com. I really appreciate you hanging out with us today. I know some of you were like, man, I really wanted even deeper secrets. We only got about 30 minutes to do this. I had to fit it all in. But I promise you, the plan that we laid out today is exactly what I did. And I went from a 400 plus credit score into the 700s, and I've maintained it ever since. You can do it too. Do not despair. It takes time, but it works. All right. Have the plan, implement the plan. We look forward to seeing you the next time here on our StreamYard, our live stream. Remember the title of this one, Bad Credit Score, Fix the Formula for Your Personal Credit. You can access free training by reaching out to us at info@creditsuite.com. Go to our website, creditsuite.com, or just simply call us at 877-600-2487. Have a great day, ladies and gentlemen.